What is GAAP? Generally accepted accounting principles, GAAP, comprise a set of accounting rules and procedures used in standardized financial reporting practices. By following GAAP guidelines, compliant organizations ensure the accuracy, consistency, and transparency of their financial disclosures. Publicly traded companies, businesses operating in regulated industries, registered nonprofit groups, government agencies, and organizations that receive federal funding awards from the U.S. government are required to follow GAAP. Other businesses may also adopt the standards on a voluntary basis. Many reputable accounting degree programs teach generally accepted accounting principles. This guide for accounting students explores GAAP standards and how they continue to evolve in a changing economy. Today, GAAP is a required accounting practice for for-profit companies, nonprofits, and government entities in the United States. What are the GAAP accounting rules? Established by the Financial Accounting Standards Board, FASB, and the Governmental Accounting Standards Board, GAAP. This is important as it helps to ensure a clear and consistent presentation of financial statements, making it easier for people to understand the information contained in the statements and to compare the financials of one entity with those of another entity. Any entity that publicly releases financial statements must adhere to the GAAP principles and procedures as required by U.S. securities law. For-profit entities and nonprofit entities, GAAP aims to provide useful financial information for stakeholders, lenders, or others that have a vested interest or may provide the entity with resources. For state and local governments, an additional objective comes into play, to help taxpayers, and others who use governmental financial statements, hold those government bodies accountable. What are the main principles of the GAAP framework? At the core of the GAAP rules are about 10 principles that aim to standardize, define, and regulate the reporting of an organization's financial information. The 10 key principles are: principle of regularity, an entity's accounting must strictly adhere to the GAAP standards. Principle of consistency, the accounting practices are both consistent and comparable each reporting period. Principle of sincerity, the organization's accountants are committed to accuracy and objectivity. Principle of permanence of methods, the accounting practices are consistent throughout the preparation of all financial reports. Principle of non-compensation, regardless of whether an organization's performance is positive or negative, all aspects of the performance are reported with no prospect of debt compensation. Principle of prudence, all of the accounting entries are free of speculation to ensure that entries are realistic and timely. Principle of continuity, it is assumed that the entity will remain in business based on its asset valuations. Principle of periodicity, the accounting periods are routine and consistent, i.e. divided by fiscal quarters or fiscal years. Principle of materiality, all of the data in the financial reports is based on factual information to fully disclose the entity's monetary position and assets are valued at cost. Principle of utmost good faith, all of those involved in the accounting process are being truthful and honest. What are the key differences between GAAP and IFRS? There are two main sets of accounting standards that most businesses follow. One is GAAP and the other is IFRS. There are some similarities between GAAP and IFRS, however, there are several key differences that should not be overlooked. One obvious difference is that most U.S. businesses adhere to GAAP, while entities in countries outside of the United States adhere to IFRS. The IFRS accounting standards are developed by the International Accounting Standards Board, IASB. Pilar Garcia, CPA, Tax and Accounting Executive Editor for Thomson Reuters, further explains some key differences. The primary difference between the two sets of standards is the underlying methodology. Historically, U.S. GAAP is rules-based, whereas the underlying methodology for IFRS is principles-based. A principles-based standard allows more flexibility in how an accounting standard is interpreted and applied to certain transactions. Garcia also outlined several major accounting differences between GAAP and IFRS. These include inventory accounting. Under U.S. GAAP, an entity can value inventory using the last in first out, LIFO, method. Under IFRS, the LIFO method is prohibited. Research and development, R&D. Under U.S. GAAP, virtually all costs for R&D are expensed as incurred. Under IFRS, R&D is generally expensed, but some R&D costs can be capitalized and amortized over time if the company can prove commercial viability. Lessee accounting. Under U.S. GAAP, a lessee distinguishes between finance and operating leases. Under IFRS, lessee accounts for all leases as finance leases. This dissimilar treatment results in subsequent measurement differences. What are the GAAP rules for capitalization of costs? As a general rule of thumb, GAAP allows for the capitalization of costs if it anticipated that the organization benefits, usually over a long-term period, from utilizing the asset or expenditure. However, the rules for capitalization of costs are not always clear and, in these instances, it is especially important to exercise best judgment and diligently document the accounting conclusion. In some cases, the GAAP is straightforward, such as the accounting for fixed assets. In other cases, the GAAP is highly technical, such as the accounting for costs related to internal use software or the accounting for certain transactions in connection with a business combination, said Garcia. When this question comes up, it is often because U.S. GAAP is silent on whether a particular cost should be capitalized or expensed, and a company might have to adopt an accounting policy. In these situations, management must exercise judgment and carefully document its accounting conclusion.
These contents only for education and knowledge purpose, and thank you for watching. Please like and subscribe my channel.